Hi, I'm Joel Curran, coming to you from the Gainesville, Florida offices of the Tower Hill Insurance Group. With me today are Susan Smith, Assistant Vice President of Underwriting, and Brian Banks, Customer Service Representative. Susan's been with us 16 years, Brian with us for 2. Customers ask us how much to insure their homes for, and today we'll answer that question. So what is the value of your home? Well, no one wants to have to think about losing their home to a disaster like a fire or hurricane. Your home is not only the biggest investment you may ever make, it also contains memories and memorabilia, a safe haven, and a family retreat that you can never put a price on. Brian is with our customer service department. This department is staffed with 25 trained reps and is open Monday to Friday, 8 to 6. Brian, what's the most common question you get regarding this issue?
The most common question we get as of recently from our customers is that the market value of my home has dropped considerably and I'm still insuring my home for the same amount. Should I reduce my coverage A?
Can you explain what coverage A is?
Yeah, coverage A is the actual amount of insurance that is applied to the principal residence. That's not including unattached buildings, fences, or your personal property at all.
There are a lot of ways to value your house. Most people first think of market value, and some people think of this as the price you would list your home for. But a very successful realtor once told me that the value of a home is what an actual buyer would pay for it today, no more, no less. Your home also has an appraisal value, which is usually an estimate used to support a certain mortgage amount or a tax amount. As we are all painfully aware, too many of us today have mortgage balances higher than our market value. If you owe more than someone would be willing to pay for your home, then it's understandable that you would be very sensitive to the value we place on your home for insurance purposes. Insurance companies talk about replacement cost. Brian, can you tell us what goes into that calculation?
Yes, replacement cost is the amount to replace the home itself. That's not including the land value, neither is it including the foundation of the home. It's just the home itself.
Are there other things that are included in the calculation?
Yes, it includes structures not separated by clear space, such as attached garage, enclosed screen, a pool deck with a pool, etc.
In today's construction market, the cost of replacing your home with comparable materials and fixtures may be more than the market value. So the amount for which you insure your home should be based on replacement, not potential sales price. It may even cost more to replace your home than it would to build a new one, since builders of new homes are often building multiple homes at a time and can take advantage of volume discounting efficiencies. In addition to rebuilding, your insurance will cover things like debris removal and building to updated building codes that require newer, more expensive features. Another value we use is actual cash value, or ACV. Susan, can you tell us what ACV is?
Yes, actual cash value is simply replacement cost less depreciation. Say you have a standard shingle roof and the expected life of that roof is 20 years. Then once it's 10 years old, the actual cash value of the roof is 50% of its replacement cost. If you apply that same depreciation to your home and it's destroyed by a covered peril, you don't have enough to rebuild. Therefore, you should make sure your policy includes replacement costs versus actual cash value. Tower Hill is here to assist you rebuild your home if it's destroyed by a covered peril. Our policy is designed to replace your home without depreciation. Therefore, we do require our policies insure to proper replacement cost.
Brian, is there another common question you receive?
Yes, there is. A common question that we do also get from our customers is whether they should increase their coverage A when they're remodeling their home, adding a new room to their home or a pool. And the common answer is yes, but we do recommend that they contact their agents for a new evaluation.
Yes, we provide our agents with the 360 value tool from ISO. It's a component-based tool that's easy to use. It can produce an evaluation for a standard home to a custom home. It takes into consideration square footage, wall construction, custom kitchens and baths, upgrade, attached pools and screen enclosures, custom features like columns, open stairways, entertainment rooms, and it is localized down to the zip code level.
Thank you. Of course, the most important thing is to make sure you can rebuild your home in the event of a severe loss. While the loss of a home is devastating, you certainly would not want to add on the burden of not being able to rebuild it the way you would like. The silver lining is that when you insure to the full replacement cost, the rebuilt home is new. A new roof, new appliances, new utilities, and the home will have updated building code features that may even help your future premiums go down.
One thing to remember is that over the years, replacement costs of homes have remained the same during these tough economic times, in spite of the ups and downs of the real estate market values. And your mortgagee will require you to carry proper coverage on your home.
At Tower Hill, we are here to help in times of need. And sometimes that need is at one of the most difficult times in a person's life. When you insure with Tower Hill, we promise to protect you in the event of a covered peril, and it gives us a lot of satisfaction in being able to keep that promise. After all, we have been doing it for 40 years.